All right, hello everyone. Thank you for joining me on this video to go over some techniques that we have learned throughout the first half of the semester in our financial modeling course. So, to start, my name is Bradford Poole. I'm going to be walking you through the three important techniques that I thought would be helpful to show you guys. And over here on our left-hand corner, we have the modeling techniques that we learned for each chapter. Chapter 1 being Excel basics, Chapter 2 financial statement modeling, Chapter 3 was financial ratio analysis, Chapter 4 is cash budgeting, Chapter 5 is forecasting and pro forma statements, and Chapter 16 is data analysis and pivot tables. So I picked three important techniques that I wanted to show, all highlighted right here on the left-hand side. And I'm going to be calculating economic profit, applying a scenario manager to test different assumptions, and then showing you how to use the trend function to forecast future data. So let's start off by calculating the economic profit. So what you're going to want to do, we're going to be using the Elvis Products International data that we have from the income statement, balance sheet, and info from the book. So there are a couple key assumptions here. There's just one key assumption that the after-tax cost of capital is going to be 13%. So let's enter that in. And let me go over a little bit what economic profit is. So this shows you how much profit a firm makes beyond all its costs, including the cost of equity, unlike the accounting profit, which ignores this. And it is calculated as NOPAT minus your cost of capital times operating capital. And NOPAT is the after-tax operating profit. Operating capital is assets used in the operations minus non-interest liabilities. And the cost of capital represents the required return on the capital. And this measure shows if a company truly creates value for shareholders. So we're going to start by adding our tax rate, which can be found in our income statement. And that will be B18, which is 25%. And we can just do the same over here to 2019. All right, now we have our tax rate in. We are going to want to calculate our NOPAT, which is going to be EBIT times 1 minus our tax rate. So we are going to get EBIT from our income statement. And then we are going to multiply that by 1 minus our tax rate, and that's going to get 112,275 for 2020. We're going to copy that, and we're going to paste special that over to 2019 formulas and the number formatting, and that's going to give us our notepad for 2019. Now our total operating capital is going to be current assets plus net fixed assets minus our current liabilities minus notes payable. So we're going to find these on our balance sheet, and we're going to do balance sheet. We're going to do total current assets plus our net fixed assets. And then we are going to subtract our total current liabilities subtracted by our short-term notes payable. And that right there is going to give us $1,335,600 for our total operating costs for 2020. Then we can do the same thing and copy that over to 2019. And we already have our after-tax cost of capital in there. That is an assumed rate. And then to calculate our dollar cost of capital, we are going to want to do cost of capital times our operating capital. So what that is going to be is that's going to be B7 multiplied by B6. And then we can copy that over. That's going to be the same thing, but C7 minus C6. So Just gonna do C7 minus C6, or multiply by C6, I'm sorry. Yeah, so that should be C7 multiplied by C6. That's going to give us our dollar cost of capital. Now our economic profit's going to be our NOPAT minus our dollar cost of capital. That's going to be negative 61,353. And we can just copy that over. We're going to do C5 minus our C8. And basically, this example shows that accounting profit, like net income, can be misleading. And even though the Elvis Products International reported profits in 2019 and 2020, it actually lost shareholder value in 2020 by $61,353, as we can see. And this kind of matches what we saw in our ratio analysis earlier in the chapter, which isn't shown here, but should be assumed. And overall, it shows us that EPI's management really hasn't performed well during this time. So yeah, that's how you guys are going to calculate your economic profit using your income statement and balance sheet. Next, I am going in to teach you guys how to apply Scenario Manager to test different assumptions. So this is going to be using our cash budget from Bithlo Barbecues example in the book. And in the last section before this, we did a what if analysis by manually changing when a big expense happened to see how it affected borrowing. The problem is when you do this by hand, you lose original data and you have others to redo it itself. So Excel's Scenario Manager, which can be found under Data up here. Let me move this. Right here on the top right, Scenario Manager can be found under the what if analysis. And this allows us to quickly switch between the saved scenarios and it updates the spreadsheet automatically. It also helps us test things like the best or worst time for a big expense and see how it can impact our borrowing needs. We can also generate a summary, which we are going to do, and this can compare all of the scenarios side by side. And this is especially useful for decision making because it saves time, prevents error from manual changes, and clearly shows how different inputs affect outcomes. So, to do this, we are going to go to our scenario manager up here and we are going to click add down there. And for our first one, it's going to be expenditure in June. So you're going to want to add that under the scenario name. And we are going to change our changing cells. And they are going to be E25 through H25. And that's just our capital outlays, which we are going to be changing for each month right here. So we're going to add that one. And since it's for June, we're going to put our 200,000 in there for June. And then we're going to make all the other ones 0 for each month. And what I did basically is I changed each of these cell names in that group to June, July, August, and September. That's why it's showing up on mine as months. You'll have to change that each cell name to June, July, August, and September through H or E25 through H25. All right, so we're gonna add that one for June. Next, we're gonna do expenditure in July. And for each of these, you're just gonna wanna add in the expenditure for that month. So we can see it's 200,000 right there, and then 0 for the rest. All right. Now we're gonna do expenditure in August, and that is going to be right there. We're gonna take away that. We don't want our expenditure in July, not June, but August. So add 200,000 in there, 0 there. Then we have one more. This is going to be the expenditure in September. All right, so take that out. Would be 0 for June, July, and August, and then 200,000 for September. All right. So for now, I'm going to close that, and then I'm going to show you guys over in J32, we want to add the equation equals max and then D32 through H32. So that's max of these at the bottom, and that's going to be important to your scenario manager summary. Next, we're going to go up back to our scenario manager and click summary, and we want our result cells from J32 where we added that max equation from D32 to H32, and we're just going to click OK. And right here, we have our scenario summary. So it's very useful for, you know, putting out the different scenarios in each month, and it saves time, prevents error, and clearly shows the different inputs for each month and how it will impact the borrowing. So yeah, that's a very useful technique that I definitely wanted to show you guys. And now to our last technique that I will be showing is trend analysis, which is in chapter 5, forecasting and pro forma statements, using the trend function to forecast future data. So we're going to go over here. This is going to be given to us right here. We're going to add our year, each year, and the sales right there. This is all given information from the chapter, from chapter 5. So we have 2016 through 2020, and these are the sales amounts for each. Now, what I want to show you guys is the trend function helps you predict future sales, profits, or other values by finding the best straight line of value through your existing data. So if you have sales for the last 5 years, like we do, trend can estimate what sales might look like in the next few years, assuming an upward or downward trend. So I'm going to start by putting 2021 into number 7, and we are going to want to add trend function, and our known y's are going to be B2 through B6, which are all right here. Those are our known y's. And the next they want our known x's, so that's going to be A2 through A6. And then it's asking for our new x, which is going to be A7. And we want to put true. B is calculated normally. All right, close that up, and we can hit enter. And if our number comes up without the right number formula, we can go back to home, and we can add some commas, then change the amount of decimals down, and we're going to get $4,300,000. as the projected sales for 2021, but then let's do this for another 2 years. Enter 2022 and 2023. And we can copy it down, but I'm just going to show you guys can copy it this way, or you can copy the function the other way. So we're going to want to go copy and paste special formulas and number formulas. So there we go. We got the different sales amounts for each year, and these are going to be found from using the upward or downward trend line that Excel creates for us from these five number amounts. So that gives us our three forecasted amounts right here. As you can see, it's positive, it's going up, it's an upward trend. And that gives us a specified amount, which can be great for forecasting data just using the sales amount and the year. So I appreciate you guys all taking your time to watch this with me, and I hope you guys have a great second half of your semester. Um, I appreciate all your time, and I hope you guys got something out of this as I taught you guys the economic profit, the scenario manager, and trend function. So those are three important things that we learned in the first 5, 6 chapters that I wanted to show you guys. So thank you for taking your time, and I'll see you guys next time. Bye bye.